believing it is a useful financial metric that will help investors to see the operating performance of our business before the impact of investment, acquisitions, income taxes, or non-cash.
I don't know if you guys hear me now or no.
Adjusted EBITDA in the third quarter amounted to a loss of $75.1 million compared to an adjusted EBITDA loss of $5.7 million.
This has been a very frustrating morning, guys. Probably just as frustrating for you as it is for me.
Which are temporary, and absorption of medical excise tax, which was a conscious decision that we made to support our customers.
You guys hear this or no?
Investments committed in sales and marketing and infrastructure to develop global opportunities, as I also just described. We believe our deliberate and ongoing investment in building the company's production platform, brands, international reach, partnerships, and operations, which directly impacted our adjusted EBITDA.
I don't know if you guys hear it. No. Let me know.
The company's global leadership position. Quickly turning our attention to the balance sheet and cash flows. As of December 31, the company had cash equivalents, and marketable securities available of approximately $4,915 million, up from approximately $322 million at the end of fiscal 2018. And the increase from the end of last fiscal year was due to the Canadian. I should also observe that the fundamental change notice issued in September on the convertible notes expired in early December without any holders exchanging the shares, so that the make-whole provision expired and the notes remain outstanding at December 31. Inventory at December 31 amounted to $185 million, up from $102 million at the end of March. And at the end of the quarter, biological assets amounted to $31 million, up from $16.3 million at the end of last fiscal year. Together, inventory and biological assets totaled $216 million at December 31, up from $118 million at the end of last year. Inventories are continuing to be scaled to meet management expectation of market demand, including demand from the legalized recreational market and sufficient choice for our medical customers. Management continues to believe that significant demand will develop for cannabis oil and particularly soft gels in the recreational market. As such, the company continues to increase inventories of extract-grade dry cannabis, held for conversion, and increase the quantity of cannabis oil and soft gel caps that we have on hand. And now I'll just take a brief moment to acknowledge the CFO transition that was in yesterday's press release. After much consideration over the past number of months, I've made the decision to retire from the CFO role at Canopy later this calendar year, and I informed Bruce, Mark, and the board in December. After being in this role for four very busy years, helping the company through an aggressive phase of growth with some 30 M&A transactions, and I would say so far, multiple financings raising $6.5 billion, and historic stock market listings, including the first for a cannabis company on both the Toronto and New York stock exchanges. I really believe now is an appropriate time to hand the reins over to a new financial executive to shape and drive financial capabilities over the next 3 to 5 years as the company prepares for its next phase of growth. I have to say I love being CFO of Canopy Growth, working with Bruce and Mark and the Canopy team, but with the personal commitment I gave, there is a toll on the family, and it is important for me to make my family a higher priority. The company has already initiated a search for my successor with candidates identified, and we expect that person will be named in the coming months. I wish to stress that following the transition to a successor, I very much look forward to continuing to serve the management team and the board of directors in strategic advisor role to help drive Canopy's future growth. The experience I've had working with this dynamic team, helping build this company in this new sector, has been a once-in-a-lifetime experience. I've often said I feel like I joined Seagram's in 1933. It's just been a fantastic opportunity. In the next phase, we'll continue to see me go hard for Canopy Growth. I'll have fun, and as we say here, we will get shit done. So this concludes my review of the financials for the third quarter, and I'll turn it back to Bruce for some closing remarks. Bruce?
Great, thank you, Tim. Just a couple of additions as we look out. So Tim has isolated and highlighted on the investments we make and how those are coming on to yield. So in Canada, we'll see that shortly. He touched on Denmark. We will begin over time, as you noticed, our reporting to become more detailed and broken out. We're going to target to give you a picture, meaning this year, which will give you visibility of how Canada, as an instance, is operating and the appropriate allocations of that. That's one of our goals on our reporting for the investors. But I do want to highlight that the objective of creating platforms will have other jurisdictions which will use cash, which is why we have cash. As far as the U.S., and I hope there are some questions on it, We have identified the site and locked up the site in the New York State area with a couple of other backup options. We've had very productive discussions with the regulators, our license, and the platform we're building out, as well as some incremental pieces that we think would fit together. So the U.S. action is moving quite quickly. Our Latin America activities haven't had as much visibility because we've been, I guess, eligible to keep them a little quiet, but that group is now about 70 people operating across 4 countries with production assets well underway in construction, which will start to show up as, real, I'll call it, both assets and yields over the balance of this year. And I think now we could probably jump into some questions.
Okay. To ensure an efficient call that gets to the questions of as many analysts as possible, analysts are requested to limit one question and, should it be necessary, one follow-up question. In the event analysts have an additional question, they are welcome to re-enter the question queue. Your first question will come from Tamy Chen from BMO Capital Markets. Your line is open.
Thanks. Hi, Bruce and Tim. I was just wondering, on your average selling price for the rec channels, almost $7 a gram. First, could you confirm if that's gross or net of excise tax? And I was also wondering if you could elaborate a bit more on just exactly where and how you're seeing this strong pricing in the wholesale channel.
Yeah, all the average prices that's quoted are net of sales tax, so that's after the excise tax is taken out.
And where we're seeing, Tammy, the most active selling points aren't correlated directly with the per capita number of people in the province. It's strongly connected with those places that have stores, and we expect in circumstances like Ontario will have stores, that is a driver on people being informed. And so we've put quite a lot of time and money into our education platform. I think we've educated over 600 people who work in the cannabis sector as salespeople with a self-paced training program, which means that the customer walking in is much more informed. And I expect the average price over time, meaning by Q4, to actually increase because the format and the stores will have much higher end products, including we expect beverages, which when you get into our vape products, which we have been putting away oils for and building technologies for, and our whether or not we get to make edibles of some sorts. We've worked through a variety of platforms, and the beverages, all of those we expect to drive to a higher margin per actual gram sold because of the other adjacent ingredients.
So my understanding was that for many of these provinces, it was the provincial crown court that was the wholesale buy. And so I thought pricing was through a more negotiated process. And so it's just surprising that it's such a strong pricing that you're seeing. So are you saying that in certain provinces, is there like a sell-through directly to retail, or? No.
So the provinces negotiate them, and then the volume that goes through the province has connected to the points of sale the provinces have. So we've seen strong sales in provinces like with more retail, and we expect the same to be increasingly true across the country as more stores open up. So it's to wholesale. Then after that, we have certain circumstances where we actually also then have a point of sale. Think of Newfoundland or Manitoba or Saskatchewan coming up with Alberta. Now, in that model, what we sell wholesale has been originally it was bulk cannabis. As the quarter ended, it included gel caps. We've now launched our roll joints, and I think our sales of those units are well through 50,000 units. But what we like about them is we now make them in 1 gram, half gram, and they're made on extreme narrow tolerance platforms, which we had to create and then file patents on. And so those produce upwards of, 10,000, call it, units we could produce in an hour. So now we're looking at how do we use that equipment in a variety of other locations that might make sense if you could export the technology. So I think you're going to see the average margin go up as more and more of these products hit, but the model is to the provinces and then through the stores.
Okay, got it. Thank you.
Your next question will come from Vivian Azer from Cowen. Your line is open.
Hi, good morning.
Good morning.
So I wanted to focus on the top line group. So when we spoke last quarter, you know, you were confident in reiterating your confidence in
That's a
consensus
super
for the back
staticky
half
call.
of fiscal 2019. Excuse me. And consensus has come down, so the third quarter was in line, but your production in the third quarter declined potentially relative to 2Q. So how should we think about the 4Q relative to 3Q? Thanks.
Okay. Yeah, so we're not giving, you know, exact EBITDA or top line, but we do have inventory growth, and we have harvest, as Tim called it, the timing of the harvest. So really, we're comfortable. We have the product set that will get to the number. What we're always looking at is where's the demand, who's getting the stores up, what's the sell-through like. But we think we do have, in fact, especially as oils are becoming presented as a more significant portion, and what we think of as a bit of a backlog for exports to places like Germany. We're not pushing down or up on what we're looking at for the balance of the year.
Okay, perfect. And then just to follow up on revenue, when you spoke at the CAGNY lunch in New York in December, you articulated that you believe that you would have the CBD products in the U.S. commercially available by the end of calendar 2019. Just wanted to see if that still holds, number one. And then number two, on the CBD and your revenue outlook, you were quoted in an interview a week or two ago saying that you were open to investing as much as $500 million against the U.S. CBD opportunity. And I just wanted to understand your thinking around that, because that seems like an awfully big investment for a market that I believe only generated about $500 or $600 million last year. Thanks.
Yeah, so a couple of things. We have put where we're going to be in New York State, and it's in large part because of the regulatory framework New York State's put in. People may have noticed a week or more ago where the regulators are starting to, at a New York State level, enforce the fact that CBD is something which needs to have proper claims, proper processes, source of access that's actually traceable. So I think New York State's going to be a strong market. Right now, will we have it in Q4? I think we're still on a track that would expect to have products in the markets where they're permissible. So maybe New York State will be a terrific market. Perhaps California will be a tough, and that's more about regulation. But we're on track with acquiring the building, having third-party growers, having processing, and whether or not it's Q4, Q1, it's a function of a few things having to go right, but that's our timeline. As far as the total investment, we think there are going to be multiple states where we have to operate production and processing of hemp, and that there'll be industrial park scale. That asset group and the channel we sell through will lend itself extremely well to cannabis if and when. And so we view these investments as creating a lawful channel to a large box and a corner store sale point of products that are disruptive to sports recovery through cosmetics and certain medical fields. But the asset group has a lot more extension over time, which can be activated very easily if states ready to go.
That's helpful. Thank you so much.
Your next question comes from Michael Lavery from Piper Jaffray. Your line is open.
Thank you. Good morning.
Good morning.
As you talk about looking out 5 to 7 quarters, how should we think about the margin and earnings piece of that, and what sort of trajectory does that look like?
So as we kind of touched a little bit, we're going to try to give you very good visibility on the earnings by country, by category, meaning medical, rec, and product type, so that we can actually help you, the analysts and investors, understand the yield potential on the invested assets in a country like Canada. And then what we wish to do is back out and normalize investments that we're making intended to be globalized. So, and we'll speak to the margin opportunity on a country like Canada, but you will see bets laid down, meaning investments in assets that are in geographies that are beginning medical programs at a federal level with a population sufficient to return in that country on the invested capital without exports. So Europe as a region, we have a strategy of investment that covers 4 countries. South America, 4 countries, Australia. And each of those will have yield that goes out over anywhere from 1.5 to 3 years. Tim, I don't know if you want to speak to the margin that we are looking at, but it is a sequencing of a creation of a very good business in Canada to reflect all the other jurisdictions where we think it can go.
Yeah, so where I commented that we have some, non-productive assets in the last quarter. This is intentional in terms of when we head up to BC Tweed, the two Alder Grove Delta facilities, and like I said, Mirabel was really just going through its first grows, which we would call the pilot grow. So those are now well and planted and growing, and harvests are planned this fourth quarter. And I think you'll see that they'll continue to improve the yields and the full utilization. So those margins will definitely move up as we get the almost 4.7 million square feet of greenhouse and later about 1 million square feet of indoor grow being fully productive. That's just in Canada, of course. And then you've got, as we mentioned earlier, Denmark coming online later this year. So getting full utilization will remove all of those costs that are hitting those margins today. And at the same time, you get the other form factors that we talk about, the edibles and beverages. And also, I think you see the medical market, while there's some cannibalization in the last quarter, we also believe that those come back strong, and those attract higher average selling prices. So all that to say is that we set a northward march on those margins so that you get in the mid 50 range or plus in the quarters that are coming.
Sorry, what was the last part you said? The mid 50 range of investment margin?
Net revenue. Yeah, the margin.
Oh, net revenue. And just on the margin side, as you look at your, call it 5 to 7 quarter planning horizon, would you still imagine the total company picture to be investment mode and growth mode more than we should be thinking about any kind of positive earnings coming out?
You will see a model for Canada. It's a function of otherwise regulatory turn up. How fast does it happen in America would obviously affect how much we're putting in, and how fast the transition is. And we think it's happening quite quickly from what was called medical marijuana to what we think of as cannabinoid therapy. And so the opportunity, if the IP results from our trials in Canada, that some of them are expected to have the potential for claims as early as Q4, that does start to put quite a bit more potential for margin, because you're no longer selling medical marijuana, you're selling outcomes on a cannabinoid therapy. So the walk around that, I guess, would say it depends on what happens on a regulatory basis, but we see a very good line of sight in Canada and Europe. America is the big unknown at this minute.
And is that calendar or fiscal Q4? That's calendar year?
Calendar for the trials. Trials do have the ability to go slower or faster, but some of the work that we're doing on the phase 2B for human and some of the work on dogs, the current schedule would look at a calendar Q4 for initial results and ability to make claims or not. So these are not decades of kind of activities.
Thank you very much.
The next question comes from Martin Landry from GMP Securities. Your line is open.
Good morning, Martin.
Good morning.
Question?
If we want, I'm going to assume Martin's question was about margin, but I don't know if I want to take the next question.
Hi, sorry, I was
there. He is.
My apologies. Good morning. It is on the production costs and margins. Actually, you're right. Just want to dig a little bit further into when you say that we exclude your non-cultivating assets, your gross margins are on 40%. Your average selling price is $730. So that gives me a production cost of around $4.25 per gram. It looks a little high, and I'm surprised that it's not trending down. You have large facilities now in production. Can you explain to us a little bit better? What is embedded in that cost and why it's at that level?
Yeah, so I mean it's like I said, they're between Delta, Alder Grove. Yeah, so they're not producing a product that is actually being sold. There's the operating costs. There's still being incurred during the quarter, and those flush right through the bottom line without the benefit of getting production out of it. So essentially your denominator, like there's no denominator grams produced in those periods where you do fit up. So it's a bit of an artificial number that's being created to come up with a cost per gram because it's not apples and apples. When those assets are fully producing, all those costs will be matched against production, and that you'll get a lower cost per gram. So it's just a quarter that we had to invest in and make those changes in the facility so that they can be up and running and producing high yield plants.
And Tim, maybe additional color to that, we're seeing at the end of this month and into next quarter, those harvests are actually coming off of a larger platform. So when you picture a greenhouse, it's not 1.7 million square feet. I know you've been out there, Martin, but for others on the call, think of it as 5 to 7 zones. And what you can't do is plant it all the first day and then harvest it all the next, 9 weeks later. So it's the rotation of getting all of the zones both retrofitted and then into production so that it's a continuous flow harvest. And the good news is most of that investment is complete and the continuous flow harvest equipment has been thought through and some of it patent protected seeking, and that the supply chain is near the top of the cycle to start producing out. The exception to that is our Newfoundland facility is the furthest step from completion, but we're looking at something there that's in August, September. But otherwise, New Brunswick, BC, and Quebec are largely finished, with the next thing being extractors, not actual production assets, but conversion assets.
Okay. And then maybe just switching gears, you're realizing a very high selling price internationally, and I'm just wondering at this point, what prevents you from shipping more products internationally?
Excellent question. So last quarter, there were a lot of changes and the regulators were pretty busy and so were we. So getting actual approvals through was not as fast or smooth as normal course. I believe we're returning to normal course, and in the interim, there is quite a lot of demand in those geographies. So as we all know, Q3 was pretty crazy in being a regulator and a producer. Both of the parties were, I would say, full up. But that has been a priority we've been focusing on since January with the regulator to increase the volume that we can ship while continuing to fill all the channels in Canada.
So it's not a case of production not being available. It's just more a function of paperwork.
Yeah. So each time you ship, it has to be requested by the foreign jurisdiction and approved by the Canadian jurisdiction, and then the product has to be available and go across. Principally, it has been the paperwork, not the product, and I think we're highly focused on the paperwork and the product being available this quarter and next.
Okay. Thank you.
Your next question comes from John Zamparo from CIBC. Your line is open.
Thanks. Good morning, guys.
Good morning.
I want to follow up a bit more on that U.S. CBD opportunity. It's encouraging you expect to have these products in by Q4. I was hoping maybe you could share what some of your most impactful products would be, what retail channels you're prioritizing, and just generally, can you talk about your discussions with the FDA and regulators in the states outside of New York?
Those are all great questions, and I'd have to think that if I gave a really clear, full answer, that would be advantageous to parties. We're not here to help. So when we look at who is interested in speaking with us, it goes from big box to corner store. What product producers? It goes from things that people are already selling into cosmetic to animal care. And we've announced our intent on trials in the dog area, and there are, we think, capacity to create a range of products. We are going to be selling finished goods that are powered by, and in many cases branded by, divisions that what you would call health and wellness. And so the FDA file has been and being developed, but the regulation is also a state level lead in a place like New York. And so this was about a great launch platform with very good regulators that lead to a medium-term FDA file that we think will be quite helpful, but we don't have that and need it to start in New York. And we have a very skilled and substantial team, which included people we took from Green Star Constellation and really key people in our organization and hires that are all U.S. focused and on this file. So it is a really live, really active file and lots of moving parts, but I think it will have a potentially serious impact before the year is out.
Okay, that's useful. Thanks. And I wanted to follow up on a comment you'd made at the beginning of this call, Bruce, about moving to phase 2B of the clinical trials for insomnia treatment. When might we see commercialization of this? And is the more likely result that you have new products to treat this, or is the benefit that you have now legitimate claims that your existing products can treat it?
So it's claims on dosage and a uniqueness potential protectable on delivery mechanisms. And it becomes a platform by which you can then increment and adjoin what we have with perhaps other claim-based inputs. And it allows people to go to a doctor and say, see, I told you. In fact, it does work, and I now want to have access. So I think it moves the needle on legitimizing. I think what many people understand is that from our observational connections with our client base, the second most common reason they're acquiring cannabis is to fall asleep or stay asleep. And if we can turn that into a form factor delivery mechanism and then a science set, you really do move the needle. And it's just the first effort with the drug master file and stabilized ingredients that can add a whole bunch of other trials on behind. And, we have a dozen plus that are mapped out and rolling up. So it's a lot of leverage for the patients. And I think it gives us a really good platform product to go out with. And nobody really does love the current sleep options.
Okay, that's great. Thank you very much.
Your next question is from Oliver Rowe from Scotiabank. Your line is open.
Good morning. It looks like you achieved a 30% market share in the recreational market this quarter. I think that's in line with your target, and it's in line with mine. So my question is, as other producers catch up in terms of bringing production online, is that a target you expect to be able to hold? And is it one that you think you can bring into the international markets as well?
Well, I think within 2 calls, we're going to hardly talk about production, and we're going to talk about conversion and conversion into what. And where we've made really significant and thoughtful investments has been to be in the conversion and creation of products that create customer demand and brand that wins. And so I would be kind of upset if we can't maintain or improve, because we're far enough ahead and have been thinking that way and working on things for 3 to 5 years, I think are just going to be ready to take hold in the next 3 to 7 quarters. So I hope someday people don't even want to know about how'd you grow that, because that's really a necessary step, but it's not the core focus. So yes, right. We should dominate, and I will be extraordinarily disappointed if we don't do that through science and claims and products.
So as a follow-on from the conversion angle, you've recently inked deals with third-party extractors. Could you discuss why you're moving a portion of that business out of house, and if this is more of a temporary measure as you bring your own facilities on, or is there a structural benefit to doing it out of house?
It's really an accelerant to the opportunity at hand. Our platform that we're building is quite a lot larger and more scale, and some of it's co-located with large production grow greenhouses. So we just thought these were very useful sources of conversion. I bet there'll still be business with them to fill gaps. That overall model, I think, is a very thoughtful place for people to have created value. But it's certainly not a core move out. We really have put a lot of IP effort on how do we get to API level of extraction. And so this is a really smart way to get a little faster now.
Thank you.
Your next question comes from Graham Krendler from 8 Capital. Your line is open.
Yeah, hi, good morning, Bruce and Tim. Thanks for taking my question here. I wanted to ask about the U.S. market. Flipping through the MD&A here and understanding that the company doesn't want to invest in any company, or I shouldn't say invest, operate in any country where it is not federally permissible to operate cannabis. The MD&A mentions the States Act as a framework that they think would allow cannabis to be federally permissible. My question is, with something like a SAFE Act that reconciles banking, does that give you an accelerant towards potential investment or strategic partnership in the U.S.?
Okay, so anything, and there's many variants right now floating around, some are bipartisan working through, and our lobbyists and crew are watching it. Anything that would allow at a state level the activities that currently occur in the state not to be offside federally. And as a result, enable parties like NYSE to see it such that our listing would be maintained, immediately mean that we're in. And so there are a bunch of formulations that could result in us being able to immediately enact our plan in any of those states. And it's feeling more likely that it's sooner than later. But it's politics. So hopefully that helps, Graham.
Okay, thanks. And then just another question here. In terms of preparation for the edibles, ingestibles, derivative market, so looking at the inventory balance at the quarter end, 65% of that balance was work in process inventory. How is the preparation for the products in that market being handled while balancing also the allocation in the Canadian channels as well as internationally?
And what's your demand forecast on Q4 of this year? So we find that oils are an extremely likely stabilized ingredient to fit into everything from beverages to edibles to vapes. So we're working on accumulating oils. Part of the prior question on why are you using these guys is because you need to have it in a state where you can actually then opportunely convert to where you want. Tim, I don't know if you want to speak to allocation, but it is a continuous active juggling act where the first to get it is science, second is patient, third is export, fourth is rec. And it's a constant, our Canadian COO has a full-time function of allocation. Tim, do you want to speak to any more?
So, yeah, no, that's exactly it. The operations group constantly looking at supply and demand forecasts and allocating what do we need, the variety and formats. And so they think about that, sweat about it every day, and in making those allocation decisions.
Yeah, and so like this is not a stockpiling exercise at all. And we're constantly looking at, as the provinces are turning up more stores, we need to fill that warehouse. I think we're doing a solid job, but I would say that effort to continuously deal with the allocation of the scarce resource is a top 3 priority in the company.
Okay, thank you very much.
Your next question comes from Matt Bottomley from Canaccord Genuity. Your line is open. Matt Bottomley, your line is open. Okay, we'll move on to the next question from Mike Hickey, the Benchmark Company. Your line is open.
Hey, Bruce, Tim, congrats on great quarter. The first quarter of adult use too, pretty awesome.
And I can confirm that it was a unique operating environment, a very unique operating environment.
I bet it was. Curious on sell-through, what you're seeing in terms of consumer demand for individual SKUs, if there's any standouts, and maybe in particular the demand that you're seeing on the adult side for soft gels. And then I'm not sure how much visibility you have on sort of the legal framework that's taking shape around edibles, but would you expect to have gummies or chocolates as possible product SKUs?
So a few questions. I would say on the data for what's selling through, really we were getting into December and January when we're actually launching in all of the soft gels that we could across the country and pre-rolls. So I think I'll be able to give you a much more accurate and crisp answer as we finish the fourth quarter, because we'll have pretty much one full quarter. Everything that we can make, whether it's chocolate to drinks, we have been building out a platform so the people who've been to our site have observed the internal chocolate factory that exists and the bottling plant that exists. And we've been doing a lot of testing and working through various formats. It's all going to come down to regulation. And so the regulations right now, it's still speculative as to, I don't know, how the cap must work on a bottle for a closure versus whether or not the glass is colored. We will have every format you can contemplate, but they are right now functionally driven by what the regs say, and the regs are coming to their final form. We haven't been waiting for the regs to get ready, but that will affect what we have to put in the market. And if it's legal, we'll have it.
Okay, thanks. And then do you have a sense of how draconian the packaging is going to be on the edibles? I mean, do you feel like maybe there's going to be a little bit of a list of what they've done on the flower side?
Yeah, just for everybody on the call, the packaging from our perspective is okay. What we're more concerned about is the quantity and weight, and the fact that it, from a recycling and consumer preference, we wanted to launch with great packaging. We've done that, but we're really pushing on packaging, enabling this to be something that has some appeal, but for sure has some functional benefits over what's currently there. And you're seeing it, right? The debate over how does a closure work on a bottle versus a can, it's getting tighter. We got out of the gate, everything that did was okay to good, and now it's just it seems like it's going to keep getting better. Keep your container. They may be collector items fairly soon.
That'd be good news.
Cool. Why don't we take one more call if there is one, and then I think everybody probably has a job related to the marks.
I have no. Oh, I have one from Andrew Carter. Your line is open.
Good morning. So quick question for you on the medical side. Obviously, it was under a lot of pressure in the quarter. Can you give us any clarity of it? A lot of it's been obviously the transition out of Spectrum. Can you give us any clarity how Spectrum's kind of performed, how it was doing last year, how many doctors adopting, things like that?
Yeah. So Spectrum has become our formal brand for all medical everywhere in the world, where that transition in Canada started to really take shape in calendar Q2 last year, where you started to be registered. In part, that was driven by provinces that didn't wish to have Tweed Medical and Tweed's rec. The Spectrum Canopy Health education on that. Current actual number of doctors writing, I couldn't give you an exact number. Total number in Canada that have written in our sector appear to be about 20,000, with more referrals from other docs. Our patient count, Tim, I don't know if you have it at your fingers, but it's in that sort of 80 to 100,000 patient, I think would be a range right now, Tim. That's
so we're just about 83,400 patients, so just down slightly from where we Q2, but I think it's premature to make a decision that we do believe that will continue to grow. Yeah.
So the medical platform will, I think, accelerate now that people can have frank discussions with doctors now that rec is there, and they don't appear to be looking for a party but a solution to their health. I think with the testing platforms we're putting out, I continue to believe that our medical opportunity on a global basis over the next 3 years potentially has the top line bigger than the rec, because there are just going to be so many more people governed by it, and the products are going to actually evolve to being cannabinoid therapy, not medical marijuana. So it is a big focus and a basis of optimism for what's next for us.
Thanks.
I have no further questions. Thank you. I turn the call back over to Mr. Linton for closing remarks.
No, that's great. Thank you, everyone, for your time and questions. Thank you, Tim. You did a fantastic job, and we look forward to next quarter and doing this again.
This concludes Canopy's Growth Third Quarter Fiscal 2019 Financial Results Conference Call. A replay of this conference call will be available until May 14th, 2019, and can be accessed following the instructions provided in the company's press release issued earlier today. Thank you for attending today's call, and enjoy the rest of your day. Goodbye.
Well, things are looking great in the market so far. Unfortunately, my live stream kind of sucked at the beginning. I don't know why I can't get OBS to work, so this is why I'm live streaming like this. For some reason, my mic works with YouTube, but it doesn't work with OBS. I have no idea why. So thank you guys for joining. Hopefully you guys make some good money. Canopy seems to be pushing the market forward, because right now all these companies, I think minus Tilray, actually no, Tilray is actually in the green now. So all these companies are in the green. Aurora is currently up 2.25% in the American sector. Tilray's up 1.93. Canopy's up 7.4%. So if you bought some Canopy, you're sitting in the green right now. Afria's up 6.93%. Hexo's up 1.65%, and even Chronos is up 4.18%. So we're gonna. It looks like we're gonna have a very nice green morning. So everybody enjoy your gains. Hopefully it continues to push forward throughout the day. And yes, I do have to get my OBS working because it's really annoying. It seems like every time I try to live stream with you guys don't hear me, which sucks because we kind of missed the first half of the live stream. I'm gonna have to figure this out. I might have to re-download the app, but thank you guys for whoever stuck around. Don't forget, leave me a like, guys. I don't want you guys to share this video because it's not even the full interview, so it's not worth it. So whoever stuck around, thank you guys. But yeah, that's it. Hopefully I figure out this whole OBS thing, and I'll see you guys next time. Bye, guys.